Hey everyone, and welcome to Project Premium Harvest. My name is Matt. In today's video, I'm going to be going over the high income ETF portfolio for the first month of January 2025. We're going to talk about how much premium I made, the amount of debt I had to pay to make that premium. We're going to talk about tax considerations, and then what does my account look like after the net. So let's get started. Right, this is just a quick day view, but my account is at $93,377.57. Right, but let's go back about a month. Maybe the 3-month calendar is going to look a little bit more accurate. And let's zoom in a little bit. So starting from January 2nd, my account value is at $89,597.35. The account has definitely been taking a little bit of a beating. Let me move myself down a little bit. The account has been taking a little bit of a beating because earlier in December, the account was valued at $113,000, but that big NVIDIA downward movement, and along with like some of the natural market conditions of going up, going down, the uncertainty of the elections, whatnot, that's kind of what brought the account value down. But currently what it is at the end of January was $95,412.28. So basically, I'm not necessarily too worried about my account fluctuating $10,000 to $15,000. One day I'm up $15,000, the other day I'm down $15,000. So the one thing I would advise for any investor that is investing in high income ETFs, don't get emotional with some of your money. Do the research, and once you have the conviction, just kind of stick with the plan for a little bit. All right, so that's just looking at the account through a brokerage. Basically, this $95,000 number, that's not what my total account value is totaled at. I have about $200,000 in margin. So technically the account's closer to about $300,000. But if I were to sell out all of my margin today, my net would be about $95,000. Just wanted to point that out. But now let's go to the spreadsheet that kind of highlights the individual performance of this first month of 2025. All right, before I dive into the January 2025 numbers, even though you can see them, I just want to give a recap of what this project is intended to do. Basically, in June of 2025, I took an $83,000 HELOC loan against a rental property I own. I threw that money into Robinhood, borrowed against it using margin, and that's where the project is at today. The account was at that $93,000, $95,000 mark, and I'm producing a monthly income stream that is continuing to grow. And so let's dive into the January numbers. So in total, I made about $10,402.20 of premium. That's either from my round hill, my yieldmax, my kurv, gpix, jepq, and some of the trades I have done in between just when I saw a opportunity in the market to run a leaps. Right? But going back and looking at the debt now that we have, the amount of debt I had to pay to make $10,402.20 was only about $1,490, right? And this is how it's broken down. So for my HELOC loan's at about 11% interest rate. So as long as my funds are making more than 11% return, then technically it makes sense for me to pull out the HELOC and then invest in the high income ETFs. So my minimum monthly payment for my HELOC loan is about $796. I usually round up to just $800, make it simple, right? And the amount of money to borrow another $200,000 in margin was about $700, right? And then whatever the difference was from my HELOC to the margin, that's what this $1,490 is, right? And then that's what the debt is. So basically, if you subtract the debt from the premium, I basically made about $8,500, almost $9,000. And if you multiply that over a 12-month period, I made about $106,000 by borrowing debt to make a monthly income stream, right? The way these funds work, that's not necessarily how much money I'm going to have in my pocket because they're actually just giving my own money back to me. Some of it goes up, some of it goes down. So it's not exactly like a one-for-one swap. That's kind of how it works. And so on this spreadsheet, I have a little bit of taxes in the gray. So for me, I'm a high income earner and I just do a blanket, 35%, tax so that it makes calculations easier. However, because some of these funds are return of capital, the tax burden is not going to be as high. Theoretically, it's going to be somewhere between, 5 and 20% after return of capital considerations is actually taken into effect. Right. But I like to just kind of highball the number so that when it comes to tax time, I'm not surprised scrambling to find, $10,000 to $20,000 extra to pay Uncle Sam, which guess what? He's going to want that money. Maybe Trump's going to eliminate income tax, but that's a hope. I don't know if that's actually going to happen. He's talking about it. We'll see. But then if you subtract all of the debt from the taxes, so if you subtract the debt and the taxes from the premium, basically that net, which is going to be in the green, is about $5,270.70. So this would be my take home. So, right, if I'm, 5-10 years from now, I finally am at a number where I think it's good enough for me to retire. I have like a house paid off, rental property paid off, and then I have this extra income coming in. I would be net $5,270, which is pretty much I'm pretty sure the average salary in the United States. And that's me just kind of sitting on this lump of money, not doing anything. Ideally, I would hope the stock market keeps going up. We are in a bull market. Everything's going great right now, but who knows what it's actually going to look like in this next year, this next 5 years, next 10 years, next 20 years. No one actually knows, but I am very bullish in general with the market. I think it will go up, but as it stands right now, that's what the numbers look like. If there's a market downturn, these high income ETFs are going to get absolutely slaughtered, at least from my perspective, because they're usually running more calls than they are running puts. They might change when the market conditions are bearish, but we will see. But now let's go into the individual funds and see how they performed. Okay, so the way I did it is, let me scroll out a little bit, zoom out. So basically for each individual fund I'm invested in, I'm going to track this number month over month to see where the growth is in premium. I'm going to be tracking it this way from now on, right? The first 7 to 8 months, I was kind of new to the channel, new to investing, new to kind of tracking these numbers. But ideally, I think coming up with this mechanism is the best way to track the premiums over the long term monthly, right? I have my weekly tracker, which I give my weekly updates, but for the long term, I think this will be very useful. And then at the bottom of this screen here, I'm going to calculate the year number. So in 2025, we'll have all the year totals. And then once 2026 rolls around, the same thing's going to happen. So it'll be a good way to track all of the data. And then down here, I have the total premium. So we only have 1 month that's elapsed. So we only have one set of values, right? We have the total premium, total debt, total tax paid, and then what the net looks like afterwards. But now let's dive into the actual individual performance of these funds, right? And the way I'm going to track this performance is just a distribution payment, right? In my weekly trackers, I track the actual value, but I think just for the premium sake and just kind of keep the video nice and concise and without rambling on, I'm just going to talk about the individual distributions. So let's zoom in and get started. Sorry for the quick little, okay. So for nvdy, in January, I made $2,591.55 in premium. So that was one of my highest performance and paying income ETFs, which is by yieldmax, nvdy. Next, I have Goop. So Goop, I only invested about $20,000 and the distribution was about $315.45. Nothing to write home about, but this fund appreciates and it's also paying a distribution. So it's like a double win for me, especially if I want to make sure my account doesn't fluctuate over the long term. Next fund we're going to look at is amzp. So amzp, I have about $40,000 invested in the amzp. It has appreciated thus far in my account. And in January, it paid me $858.90, which was a massive payment. If you guys were following me early on in my investing journey into these income ETFs, I used to be invested into amzy, right, which was a yieldmax fund. Initially, when it came out, the NAV erosion wasn't too bad. The premium was enough, but then over time, I decided to sell out of it and then stumbled upon these curve funds. These curve funds are a lot more effective. They maintain their NAV and they actually appreciate if the stock market's going up and it pays you a premium. This amzp premium for a $40,000 account rivals that what I made at amzy, and there's no NAV erosion thus far. So if you guys are in amzy, I would highly recommend looking into amzp and maybe considering switching, right? And for jepq, at the time of the investment for jepq, I didn't have the full $20,000 that I had invested after the distribution. So this was basically December, whatever I had invested since December. So it was only $16.74. For February, the next premium is going to be more accurate. I think it's going to be somewhere between $150 to $300. So this one looks a little small, but no big deal. All right. And then now let's go to the weekly payers. So for xdte, the month of January paid me $1,596.34. right? It was a pretty good distribution. I have about $60,000 invested into this fund, so it paid me about $1,500. You know, if I had $120,000, it'd be $3,000, right? So just do the math like that. Very simple. But for my rdte payment, I'm also invested about $60,000 into this fund. It actually paid out more than xdte. That's kind of why I like to keep rdte in the mix. It invests, or it runs options on small caps, and it's just like a different perspective, and the premium is usually higher. But yep, for rdte in the month of January, it has paid me out $2,236.34. That was actually pretty good, right? When you look at these funds on a weekly basis, the ones that do pay out weekly, you kind of like, $300, $150. But then once you look at it over a month period, the premiums are actually substantial, right? So looking at ymax, I only paid about $20,000 to invest into it. And the premium paid me out in the month of January, $819.26. For a $20,000 investment, that's not bad, right? If I, triple it to what I invested into xdte, the numbers would actually look pretty similar. Or actually, ymax would have a higher distribution, but because of the NAV erosion, is a little bit worse. And then the day, does it actually even out? It's hard to say. I like to have both in the mix, just to kind of, not necessarily hedge against themselves, but just kind of like a balanced portfolio. Now let's go over to ymag. So for ymag, the premium wasn't as high as a ymax, but it still paid out $514.11, and the NAV erosion wasn't as evident as ymax. And so let's look at the last two markers here. So for gpix, same story as jepq. I didn't have my full $20,000 invested into gpix when the premium came out. So these numbers are really reflecting of December's numbers, right? I didn't have the $20,000 in before the record date, so therefore I wasn't paid out for owning the shares. So with that being said, gpix $14.50, right? It is kind of a laughing stock to look at this. However, I do think it's important to track it. All right, and lastly, just my personal trading, doing leaps on SPY, and I'm working on an nvdy call. We'll see if it pays out. But in the month of January, with just my normal trading, I made $1,439.00. Cool, guys. So we talked about so at the end of the day, that pretty much wraps up the video. This was just kind of a quick overview of what my January numbers look like. All right, guys, that was just a quick recap of my January 2025 performance for this high income ETF portfolio. Let me know what you guys think in the comment section. How was your January? I thought my January is pretty substantially good. Didn't necessarily like the market fluctuations. However, at the end of the day, I'm pretty long on these income ETFs. I'm just going to keep reinvesting anything that is below my dollar cost average, and anything when these funds, if they go past my dollar cost average, then we'll decide what we do from there. We might invest in something else. But yeah, guys, enjoy your journey out there. Have fun. Matt out.